Short exercise 7-10, cash payments journal. Now remember, the only transactions that go in the cash payments journal are when we are paying cash. And because cash would be going down in every transaction, they dedicated a column to cash decreasing, this cash credit column. So as it's being credited, cash is going down. So our goal here is to enter these transactions into the cash payments journal. So on January 5th, we issued check number 430. So we can input the date first here, check number 430 to purchase equipment for cash of $2,200. So we know we are purchasing equipment, so our equipment, our asset is going up, so that is the account to be debited, equipment. And then we have the cash credit. We paid $2,200 in the form of a check. And of course, don't forget the debit amount. So we debited equipment, $2,200, and that is another account there since it's not listed here. So because they don't have a dedicated equipment column here as a debit, they must not purchase equipment often. If they did, they would have dedicated a column here for it. So next up, on January 7th, we purchased merchandise inventory for cash of $400, issuing check 431. So January 7th is our date, and then check number is 431. And what are we getting in exchange for this cash? We are getting merchandise inventory. So we'll input merchandise inventory. And this is also another account to debit, so this is going to be 400. This is again because we don't have a merchandise inventory debit account here. We do have a credit one, however, so make sure you don't accidentally put that here. And then our credit account, of course, is going to be cash 400 to balance our transaction here. So next up is January 18th and check number 432. We'll input those two. The rest of this one is a little bit more complicated. So we paid this Karis company the amount owed of $1,025. And if we're paying them, they must be a vendor. And it says the amount owed was that $1,025. That's what must have been sitting in accounts payable for $1,025. So we were debiting accounts payable to lower it since they are paying us for $1,025. This company is the account we are debiting, and that is the accounts payable for them. However, then this Karis company has a $60 discount. So that means the amount that they're paying us is $60 less. That's $60 less in cash that we are receiving. So that means the amount that we received in cash is $965. But then our transaction here doesn't balance. So there needs to be one more credit because again, debits need to equal credits. So we have 1,025 debits and then 965 in credits. So that means that $60 has to go somewhere. So what happens when we pay early? When we buy inventory, we pay early and get a discount. The cost inventory goes down. So we have to find the inventory, and it's going down by that $60 credit. So that's going to be our credit here because it is lowering the cost of inventory by 60. And then the reason we put in this Karis company under the accounts debited is because accounts payable is involved. So we had to say who that vendor was here. And then lastly, on January 28th, we issued check number 433. So January 28th, check number 4333 to pay utilities. So we are paying that $200 towards utilities. So that's a cash credit. Our cash is going down by $210. So let's look for a utilities expense column that would be debited. There isn't one, so we are going to have to use the other accounts debit column. So that's going to be for that $210. But then what account are we using? The utilities expense. Let's go ahead and check our answer. Nice work. So in the next problem, we'll take the same cash payments journal and we'll post it to two places. One, the accounts payable subledger, because there's an accounts payable column, and then we'll post everything else to the general ledger.